Hey, welcome investors to the 40 Finance channel. My name's Jeff Beers. Today I'm going to look ahead a little bit and share with you a few growth stocks that I've been watching for a while. I've done a decent amount of research on them. But for me right now, the price is just too high. However, I'm sort of quietly hoping for a stock market crash over the next 30 to 45 days here with all the uncertainty in the market. So there could be a chance, if my guesses are correct, that I would be able to jump in these stocks and try to get them at a discount, so to speak. Or if you don't think there's going to be a crash, then maybe they just keep going up like everything has been so far. But I think we learned something from FSLY here recently when they came out with some weakness in their financials. And all of a sudden that stock just tanked. FSLY, I think, still a good company, a lot of stuff going for it. But if you were waiting for a discount on a stock like that, it just goes to show you with FSLY how quickly the dynamics can change. Reminder as always that my stock picks and projections are just my opinion for your entertainment. Please do your research and due diligence before investing in any stock. Now, if you like stock market analysis and going deep on stocks like these, then please subscribe to the 40 Finance channel. Thank you to everyone who's supported the channel so far. And finally, if you're interested in joining my email list, you do get a free copy of my 15-minute stock analysis guide when you sign up. The link to sign up for that is in the description. All right, before we kick things off, I want to give you a feeling of, where I stand today. What is my opinion on today's stock market? And my opinion is that it's very expensive. And I think that you could grab almost any stock, certainly in the NASDAQ 100 and probably the S&P, and you could find a reason to say that any of those stocks are overpriced right now. And with that being said, we just kicked off earnings season this week with the banks, and the banks, I don't really invest in those, so it's kind of a lame week for me. But starting into next week, we're going to have some names that we all recognize, including some of these fast growers. It's going to be interesting to see how their Q3 went as the world sort of opened back up, and there's suddenly a lot of pressure to replicate the results that many of these companies saw in Q2, at least those that had good quarters. And those that had bad Q2 and Q1 because of the pandemic, there's definitely going to be some impatience in the market to say like, hey, when are you turning the ship around? What are your plans for the next 6 to 12 months? As I think we've all figured out, like we've got 6 to 12 months on a lot of this behavioral shift that's going on before anything changes on the pandemic. Throw in the election, you throw in things like China trade, and all of a sudden, man, this is not stable ground that we're on, I guess is what I would say. And while I do think the future is bright for many stocks in the stock market in general, I just think that if you're patient, you will be able to get in on different dip opportunities, even if they only last a day or two. I think buying on a green day is a real bad idea today. And finally, for me personally, I'm saving cash. Right now, I don't have a huge stockpile for stock purchases, just because this is real life for me. This is not living in my mom's basement and buying Robinhood stocks, right? We're trying to manage a family, 3 kids, house, all those things. I've got a little bit of a nest egg saved up for if and when this crash happens, but I'm just not going to go throwing money around because I'm bored and buying stocks that are overpriced. So that's where I sit today. I think that will be helpful as you see how I'm going to look at these stocks on the board. All right, first stock on the board today is ANGI Homeservices. I've talked about this one a little bit over the past couple weeks, and the more I stare at it, the more I dig in, the more I like the long-term opportunity. And on the flip side, I also see huge dip potential for this one, certainly over the next 12 months. Angies Homeservices, if you're not aware, run websites like Angies List and Home Advisor, where you can sign up to apps and get bids, connect with contractors basically for home remodeling and other services. Stock price today at $11.06. You see in the yellow box, PE ratio of 258.14, an EPS of only 4 cents over the past 12 months. Their earnings date is coming up on November 5th. So that's going to be important for Angie Homeservices, and I'll dig into that in a minute. Let's finish the stock though here. 52-week range, $4 to $17.05. The $4 coming, of course, during the big crash. Looking up at the top, this company generated $1.4 billion over the trailing 12 months. They have $420 million in cash right now and a manageable debt load of $239 million. Now, here's the thing with Angie Homeservices right now. They are struggling with a supply versus demand. Their website traffic is doing good, but the actual kind of referral money that they make from connecting homeowners to contractors is down a little bit over normal percentages because there's way more demand than there is contractors right now. But it's good to see that the market is strong, and that's one of the reasons that I'm super bullish on them. But on the same token, if they come out on earnings on November 5th and they're still having this sort of supply problem, then we are going to likely be in good shape to get this one at a discount over conceivably the next 3 to 6 months. If this one goes anywhere near, even under $8, $7, something like that, I would definitely buy long term here. Okay, we got a lot of circles and arrows here. What we're trying to do is illustrate the point of growth. If you start where the blue area is, and you go to the bottom of the blue, year ago EPS was 7 cents. Follow the arrow up. This year, they expect it to land at just a penny. And that is obviously because you pretty much missed a quarter where nobody was doing any work with contractors. And then we talked about supply and demand. From 1 cent, you go over to look ahead to next year, and that's where the growth sort of resumes at 11 cents. And then from there, I think Angie begins to really take off. In the orange at the bottom, again, you start low, 1.33 billion. That was last year's sales. Going up to this year's sales, you're at 1.47 billion on an estimate. And then next year takes off another notch to 1.78 billion. So classic case here of struggling a little bit now, but it's not even a struggle from like a demand standpoint, right? They've locked in demand. It's the supply of contractors that's coming. So I really like that. I like when your demand is high. However, if you can't complete the service that you're advertising, that's definitely a risk for long-term users. But I'm probably in if we can get a deal on this one. All right, on the Tip Ranks dashboard, take a look at what some analysts are thinking about Angie. You're basically at anywhere between $15 and $18. So if you can get this one on a dip like I'm hoping to, and you'll probably have to hang on at least for 12 months for the home contracting market to get back to sort of a normal pace, then this is a double up, right? This is an easy double up, and I would argue that if you could go 2 or 3 years and the world is back to normal, then this should be a 3x, 4x kind of stock is how I'm looking at it. All right, next stock on the board that has been on my watch list for a long time, and that is Etsy. Etsy is a marketplace for folks who sort of make their own items, and you think about crafts and t-shirts and artistic type handmade things. Very popular website, incremental growth from a traffic standpoint, a lot of positives going for it. If we look at the yellow box, you got a PE ratio today of 117, which isn't really super terrible for a growth stock like this. At least they're making money, unlike some of the others that I've seen. You got an EPS of $1.28. Their earnings date comes out on October 28th, so another important day that's really right around the corner. Looking at the top, trailing 12 months revenue of $1.12 billion, cash on hand of $1 billion, and a debt load just beneath that. All right, so let's look at Etsy's growth here. Start in the blue from the bottom and going up. 76 cents was the year ago EPS. This year they're at $1.94. and next year's supposed to go to $2.11. Etsy had a huge run in Q2 because people were making face masks and selling them on there. And of course, we all know the stores had no face masks. So people were making them out of fabric and whatnot and selling them on Etsy site, and it just went crazy, which is great. But there's still this little X factor of like, hey, beyond that, how can Etsy do in these times now that face masks are easier to find? I think the site's a gold mine, and I think anytime you're going to allow people basically to make their own store and go online with traffic, you've got two forces that are pushing something like this. You have sellers who are going to be promoting their store, aka promoting the Etsy website, and then that's going to attract buyers. And I can tell you, at least from my wife's perspective, Etsy is very user friendly and literally fun to look at, almost like a Pinterest, except you can just buy stuff right there. Revenue estimates at the bottom in the orange area, starting at the bottom, 818 million was their year ago sales. They're going to double up this year basically to 1.5 billion. Next year's estimate at 1.71 billion. I have a feeling when all is said and done that Etsy is going to smash this year, call it plus 10, 15% from these estimates. And then that's going to carry over to much larger estimates for next year, maybe add another 20% to that. Because you can imagine the holiday shopping season with some of these personalized gifts and stuff that they would sell on there. And once you get people in this mode and over the hurdle of making their first Etsy order, the sky sort of becomes the limit as far as repeat user behavior. All right, on the tip rank side of things, you've got strong buy signals, but you can see that these price targets, 160, 160, even a 138 in there. This stock is running hot. Doesn't seem like there's a lot of immediate money to be made. Plus 6 or 8% is decent, but I'd rather try to hold out. If we got a 10 or 15% drop in the market as a whole, if there was some bad news in the earnings report, maybe that drops it a little bit. We'll have to see. That's the risk I'm taking, right? Which is I'm waiting when we know that Etsy is doing good things. I'm still going to wait for the price to go down. It doesn't mean that Etsy is going to tank because of the company. But I think that the stock market could have a correction / crash at some point, and that's when I'll jump in. All right, next up we've got Expedia Group. I was a huge fan of travel stocks prior to the pandemic, and I was making moves to get into stocks like Expedia this year, but those plans obviously got canceled, and I decided to just avoid the lot for now. But Expedia has been on my list for a little while. Current price of $91.25. No PE ratio today, and that's because the trailing 12 months EPS, as you can see, is negative $11. Earnings date on November 4th. I think that we see a little bit of an uptick from travel, but I am worried Q4 and Q1, basically the next 2 consecutive quarters, are going to be painful. Looking at the top of the board, trailing 12 months revenue of $9 billion, cash on hand of $5.5 billion, which is good. But that debt load of $10 billion is for real. But we're probably looking at a really tight cash flow right now. And then you just have to hold the fort down till you can probably get into spring of next year. And then I see travel just, basically exploding if we can get any sort of safety signals that get people out of the house. Okay, growth trajectory. Start with the blue, go down to the bottom. $6.15 was the year ago EPS. Follow the arrow up. Minus $7 or so is about where they're supposed to land this year. And then looking ahead to next year, you land at $1.29. So again, this is, this stock has a year plus before we start talking about the good times coming back again. And that's why I'm waiting for a good price on it. You scroll down to the orange, year ago sales at the very bottom, $12 billion. This year, less than half of that is the estimate, 5.61 billion. And then off to the right, next year's recovery is 8.3 billion. You know, good news is coming, but I don't think you can be like super bullish on travel right now. I think you can be super bullish on travel 3 years from now. So if you want to get into Expedia today or something like it, and with the concept that it is going to be a lot better in 3 years, I'm 100% with you. But let's try to take some advantage of potential dips along the way. There is going to be bad news for Expedia over the next 6 months. I don't know in what form that will be, but I will be there waiting for it, and hopefully I can knock, 15, 20, 25% off that $90 price tag of today. All right, on the tip rank side of things, looking at the price targets, you're basically between $85 and $120 right now. And if you look at the analyst ratings, you got hold. So that just kind of tells you the uncertainty of travel. I don't think there's any rush to get into Expedia here today. All right, I'm gonna throw one bonus in here. This is Netflix, and I've just started some major research on Netflix, and I'm going to do a close-up stock about it here in maybe a week or two. But when you're thinking about growth and you're thinking about the stock market, maybe a crash comes in and some discounts come into play, keep Netflix on your board. I think that there's this sort of sentiment out there that Disney Plus is going to lead to Netflix downfall, and it bugs the crap out of me. And part of the reason it bugs me is, right here. So we look at a couple highlighted areas, revenue and EPS growth. It's just going up. Okay, and it's going exactly where you want it to go. And then off to the right, the forecasted growth, 1 year EPS growth forecast of 53%. The 5 year, and this is annual, every year for 5 years, EPS growth forecast for Netflix. EPS growth forecast, 28%. So keep Netflix on your list. All right, so there you go, guys. That is my crash shopping list for some growth stocks. Again, I'm not in a major hurry on these. I'm going to be patient and wait for the right time. Let me know what stocks are on your shopping list in the comments below. Thanks as always for watching. Please subscribe and give me a like if you enjoy this content.